lucky to have a group of people here that can give you a very diverse but informed idea about the situation with tax avoidance and the effects that tax avoidance has, both nationally and internationally. We have John Christensen, who is on my far left here. I don't know if that's political as well. There he is. He is an economist, and he's the director of the Tax Justice Network. He's an unofficial advisor to John McDonnell. I think that's a reasonable way of putting it. And he has had, is it in your past, you were an advisor to the government of Jersey. When I say he was an advisor to the government of Jersey, that doesn't mean he was encouraging them in their tax dodging, rather the reverse. But you'd expect that, wouldn't you? Okay. So, to my immediate left is David Quentin. He is a tax barrister, an expert on global nature of tax abuse, and he too is, I think you're a senior advisor to the Tax Justice Network as well. Okay. And this is the order of people that how we're going to speak. To my right here is Angela Moyo, and from Southern Africa. He's going to say something specifically related to Zimbabwe? I don't know. About the effects of, what the effects are of the wholesale theft and concealment and salting away of sums of money which should be spent on the people who need it most. So this is the more international perspective on these things. It's too easy sometimes to think of these things as being simply a national event. What's the tax problem? But actually, as surely things like the Paradise Papers and so on have told us, if nothing else has, this is an international phenomenon. This is not something that stops at the White Cliffs of Dover. This is not something that stops inside one country. Therefore, it needs an international perspective, not simply a national one. However, having said that, we've certainly got a house that needs putting in order, haven't we?
Yeah.
Right? I think you'd agree. And at the end, I'm hoping that somebody will be able to say something about how the Labour Party might respond to some of these issues. We've got a document here, but I think somebody may be able to speak to that as well. But anyway, we did have a promise from a Labour MP, Emma Denko, but she was unable to come. At the last minute she said she couldn't make it. There was nothing we could do. We found out, was it this morning? I think it was this morning, Pete, wasn't it? So there was nothing we could do about it. We couldn't suddenly dash down to Westminster and pull someone out. It wasn't going to happen. So that's where we are with that. However, I think you've got a fairly illustrious, you've got humble me here, but a fairly illustrious panel of individuals that I think have got something to say. I'll just kick off and make a few framing remarks, really, about tax. You know, I'm not, as I say, I'm not an economist, and I'm not an accountant or an individual with that kind of technical knowledge. I am a citizen, though, and I do actually care about what happens to my fellow citizens. I'm interested in politics because I'm interested in the welfare of the common good. Strange, I know, in this day and age, but there are some of us, aren't there, who are still interested in that. My background's in political philosophy, and I'm not going to draw on that in particular. I just want to draw on something which I hope that all of you will perhaps, resonate to or respond to, which is, I think, this: that there's a number of peculiar ideas going on about tax at the moment, and I just wanted to quickly say something about what they are. Don't worry, I'll be quick. The pain will be over soon. The first thing I want to sort of comment on is this. There seems to be a strange idea going around that taxation is something only for the little people, or that tax is an optional extra that you might get involved in, or indeed that tax, if it has to be paid at all, is a necessary evil, which you're quite legitimately, it's quite legitimate for you to get a clever lawyer to help you pay it as little as possible. I think this is a deeply mistaken idea, and I think it's one that we need to challenge as much as possible. Now, what is one saying about this? The idea that the money that you get, whether you get it through a wage, a salary, or any other route, is uncomplicatedly yours until the tax persons come along and take it, is a deeply misguided one, in my view. I hope that the people who know more about this are going to support me in this. It's a deeply misguided one. It's an idea that even individuals who are committed to the idea of a minute state that doesn't supply you with hospitals and doesn't supply you with schools, really are wrong about. Why are they wrong about it? They're wrong about it because as soon as you will property in any form at all, you will things like contracts. You will the ability to enforce those contracts. So the minute you actually have a society with property in it, and of course there are some of us who would like to move beyond that, but never mind. As long as you live in a society that has anything like that, you are already willing tax. Tax isn't something that comes along later. Tax is deeply embedded in the whole notion of being engaged with other people in any kind of property-related relationship. So let's get away from that idea completely. Also, by the way, you get this idea, don't you, that people say things like, well, of course, you've got an ISA. You're trying to limit your exposure to tax as well. This is quite disingenuous. There's a big difference between something that Parliament meant you to be doing to encourage you to save, and something that you're doing to kind of get round the rules as easily as you can. This is deeply misguided, and again, needs to be challenged. Even someone that wants a minimal state, that does nothing but, I don't know, sit there and patrol the streets or something, they ought to question this notion of, they ought to be aware of the fact that this notion that tax is an avoidable extra is a mistake. More than a mistake, it's a delusion. Now, we want more than that, though, don't we? We're in a school, right? That school, where did the money come from that? Where does the money come from for the NHS? Where does the money come from to lead a life that is one in which is connected with other human beings? One which takes account of the neediest in our society and not simply those that are doing well. That comes from a connection to the common good. And you don't get a connection to the common good if you have an environment, an ethos, which has encouraged individuals in the view that they are lonely atoms who can accumulate as much wealth as they like, sort it away, and leave it to the rest of us to somehow get along as best we can. It needs to be challenged. Second point, really, and it's a more positive one, I guess. It's this. I don't know if you've seen those TV programmes, you get sometimes an interview in Newsnight, when somebody says, there's an issue, isn't there, around your company's tax avoidance procedures, and the person says something like this, my shareholders really demand that it's part of the rules here, that I limit exposure to tax as much as possible. Are you saying that I'm immoral? Are you saying I'm an immoral person? And the idea is always kind of like, well, you're just trying to moralise around tax. This is just a technical issue. Well, I think we need to speak about that as well, because there's another kind of error, fallacy going on around that. It's the idea that if you keep your hands out of the till and aren't personally engaged in criminal activity or aren't personally an immoral individual, by heavens, there are enough individuals that are. But let's suppose that that's enough. But I think that's quite wrong. It's quite wrong because our society is built on a kind of glue, a kind of social bond, something like an ethical substance, almost. And that ethical substance, that social bond, is what happens at the trivial end, almost, when we're polite to people, and at the more serious end, where we act to end the injustice of some of our fellow citizens. That social bond is the common good. And it's a matter of attitude that needs to be challenged here. If your attitude is, the common good means nothing to me, I simply want to limit my tax exposure, then I think there's something badly wrong with you. And I think there's a lot of other people who agree with that. This is what I want to make a brief point I want to make about that. It's true that philosophers, going right back to Aristotle, have made points like this, but never mind that. Never mind that. You feel, I feel, I'll be bound, you feel a sense of outrage when you find that not only have, say, bankers been handing themselves gigantic bonuses, or that huge sums of money have wound up in tax havens, you feel a sense of outrage. I think that you are right to feel that outrage. You're right to feel that outrage because a sense of decency has been offended against. That sense of decency is the sense of decency that arises from the notion that we have that we aren't simply competing subjects, little atoms with no bond with each other and only our own personal gain to worry about. I think that one of the great things, actually, is despite the Me First decade of the 1980s, despite Thatcher and Major, and I'm going to say it, Blair, all right, and despite the current lot, the current crew, that there are still resources, ethical resources, if you like, that exist in this society. And one of the pieces of evidence that that exists is the fact that you're all sat here now. What happened in June at the election? I think people have had enough. They have had enough of a kind of kleptocracy that takes the view, you know, an organisation, a government of thieves, essentially, or at least individuals that enable what I would think of as legal thievery, and support it and endorse it, and take the view that, in the end, taxes for little people and the rich and powerful can get away with it. Finally, and it is really the final thing I want to say about this before I hand on to fellow speakers, I want to say something about inequality. Inequality is linked to this. The idea that the tax evasion and avoidance is completely unconnected to actual issues of social inequality is crazy, and it's no good Theresa May saying that she's got a programme or an agenda for dealing with problems of equal opportunity, for dealing with the unfairnesses of life, and then nodding, as it were, along with the individuals who say it's fine, we're not going to have any kind of, what do they call it, we're not going to have a tax, on a Robin Hood tax, you know. We're not going to have that, we're going to do all we can to frustrate Europe in every way we can from actually bringing any meaningful controls on the way in which capital can get sorted away. It's not good enough to say that and then say you care about social inequality, because the two things are connected. There are two things. One is material inequality, and you don't need me to go on about that. You don't need me to go on about the fact that we have people sleeping in the streets. We are walking through the streets of London, and it barbarises us, in my view. Not just because if we walk past people and crossen ourselves, as we end up by doing, to the appalling sights that we see in the streets of London and the other major cities of this country, and we are left accepting that, then we are sinking down into a kind of state of affairs which I don't think any of us should be accepting, not even for a second. But finally, there's another kind of inequality. Apart from the inequality that arises from social deprivation, important enough though that is, there's also, if you like, moral inequality. What does it say about a society that effectively says this guy can sit on a yacht, get away with, he can actually effectively plunder pensions. This individual can go from this country, can organise a deal with his wife, or with his partner, or whatever, to make sure that he doesn't pay the taxes. Remember, the taxes that pay for the roads, that pay for the schools, that pay for the hospitals, all the things that the workers, who no doubt are the individuals that actually he used to extract the profit that he did so well out of, but he doesn't need any of those things. We pay for all those things, he doesn't. What does it say about a society that has a wealthy elite who essentially are saying, you people can pick up the tab for this stuff if you like, we don't have to? And that's a kind of a moral inequality, I think, which is not only important nationally, but also internationally. Because this country, which has a history of empire and colonisation, is still involved in ransacking other countries, or is complicit in the ransacking of other countries. And as long as that goes on, it's no good prating about British values to people around the world, because we're going to look like a joke. Well, we do already, in my opinion, in some ways. We have to accept that we have a responsibility for what happens in Africa, what happens in the Indian subcontinent, Latin America. We can't just walk away from this, and we can't just go on pretending that what happens in the City of London, or what happens in companies with interest in places like Africa, has nothing to do with us. It has everything to do with us. There is the domestic face of iniquity, if you like, of tax evasion and avoidance, and then there's the international face. And that international face involves ransacking the developing world. And that's something that has to be changed as well. And that's why I'm hoping that a Labour government will at last begin to act against these kinds of abuses, which in my view are an offence to all of us. We have to mobilise people, we have to motivate them, we have to act, because this sort of thing has to stop. Thank you.
I'm an economist, I'm a political economist, as you heard earlier, an unusual career in that I was, for a very long time, economic advisor to the government of Jersey, but I was there in my capacity as an investigating economist looking at how tax havens fit into the global economy, and I'm going to talk a little bit about that. I want to echo something that Chris just said about Britain's role in this. Britain has a shocking, shoddy, long-term role. It is quite clear that our post-imperial development strategy, that is after 1956 and the collapse of the former empire, consciously or otherwise, UK governments have built Britain's economic strategy around this country operating as a tax haven. It has benefited a very tiny elite, not all British. Many of the people who come here and live in London, Russian oligarchs, people from the Middle East and so on, who park their money here and get non-domicile treatment in this country, benefit. But I will argue that far from being a sustainable and stable development strategy for this country, it's actually harmed almost all of us. The City of London is harmful to virtually all of us, apart from a tiny elite. And that has an economic, or political economic name called the finance curse, and I'm going to talk more about the finance curse in a few minutes' time. But I want to just talk a little bit about tax and why it's so important. I was commissioned 15 years ago to create an entirely new global network called the Tax Justice Network. It's an expert network of people who work with civil society to open up a conversation about tax. And the reason this was so important here and across the world is because the left bottled out. Tony Blair, or less him when he was Prime Minister, and his Chancellor didn't want to have a conversation about tax because they were scared of the phrase tax and spend. Now forgive me, but what is the role of government other than to tax and to spend? I mean, he kind of missed the point of it. And he actually made things massively worse for the left as a result of that. Tax is at the heart of the social contract. It's the way that you and me, most of you have never seen me before in your life, you and I have a shared set of values, a shared set of needs, and tax is what helps us to achieve those needs. We want health services, tax. We want education services, tax. Justice services, security services, all of that requires tax in one way or another. We want a stable society, we want to overcome some of the problems that market economies throw up. We need to use the tax system. And the left bottled out of discussing tax for 40 years. I was commissioned to bring tax back into the national and international conversation. And we began that conversation by focusing on tax avoidance. And that's because tax avoidance is absolutely crippling this country. Tax avoidance and evasion, as far as I'm concerned, there's no difference between the two. They have the same impact in most respects. But it costs this country somewhere in the region of 120 billion a year. Think how many hospitals, how many schools, how many extra police people we have on the road, etc., etc. You could fulfill most of the shopping list of the left if we had that money. Think about all the tax reliefs we give to the big corporations, again running to tens of billions every year. And I'm not alone, the International Monetary Fund agrees with us, and so does the Organisation for Economic Cooperation and Development. These tax reliefs serve no purpose whatsoever apart from to make the owners of capital richer. So let's start talking about that. Now, Chris, you talked about several things, just general ideas around tax. Part of the problem we on the left have had in not wanting to talk about tax is the right has painted tax as a bad thing. The right dreams of what's called a night watchman state, and that's exactly what the current government aims to achieve, a state that only provides security and military services, and that's about it. They want to run down absolutely everything else, including pensions and so on, leaving us entirely to struggle within a market system. But we all know that markets are imperfect. And one of the roles of tax is, of course, to overcome market imperfections rather. So let's talk about tax from an economist's point of view in very general terms before we get down to the specifics. First of all, tax plays a key part in raising revenue for governments. Governments can, of course, raise money and issue money, but tax is an important part of raising money and spending money. But more importantly, tax also plays a key part in, or should play a key part in redistributing wealth and income. We know that in Britain we have remarkable levels of wealth inequality. By the way, the official statistics massively underestimate income inequality and wealth inequality in this country, because the really wealthy people, that what are called ultra and high net wealth individuals, hold their money offshore and have done for years, for decades, and that money is not included in national statistics relating to inequality. So actually we have a massive underestimation of the true level of inequality in this country. Tax plays a key part, or should play a key part, in redistributing that wealth. The truth of the matter, if you look over the last 40 years, we've seen a very, very major shift in the way in which tax is raised in this country. 40 years ago, implementation of VAT came in at 7.5%, now at 20%. That is a very regressive tax. It impacts every household regardless of whether they are rich or poor, and it impacts the poorest households worst. At the same time, we've seen taxes on capital massively reduced. We have virtually no wealth taxes in this country. Personal income tax rates at the upper end have come down enormously since the 1970s. Corporate income tax rates have come down enormously since the 1970s. Capital gains tax has come down to a historically low level. All of these things mean that the rich get richer, and governments then either have to cut back on public services, or they increase value-added tax and stealth taxes of one kind or another. So the role of redistribution tax as a redistribution agent has massively diminished. Tax also needs to reprice things when markets fail, and that's something that most of us don't recognise day in, day out. We all know that, for example, that tobacco is massively underpriced, because the cost of tobacco, or rather the price of tobacco products, does not reflect the health impacts that we as a society have to pick up. Ditto hydrocarbons, petrol and so on. So in practical terms, tax has a key part to play in repricing market failures. It also has an important part to play in rebalancing the economy. For the last 10 years, since the great financial crisis, it's been quite clear that monetary policy, the use of interest rates, has very limited application when interest rates are down close to zero. And therefore, the government does want to either boost the economy or slow down the economy. It needs to use fiscal mechanisms, by which we mean, amongst other things, tax. And finally, and this is subtle, tax plays a key part in building representation. If you don't believe, if you stand back and look at what generates most column inches in the British newspapers, there are 2 3-letter words ending with X, which generate endless political comment. And tax is something that we in Britain and in most European countries get very, very agitated about, quite rightly so. But we need now to have a conversation about what kind of tax policies a Labour government needs to have, or needs to put into place, both at national level and at an international level. I'm going to very quickly talk a bit about Britain's role at an international level, because I am on the Organisation for Economic Cooperation and Development's Tax and Development Task Force. What the heck is that, you might ask? Well, the OECD, which is the Rich Nations Club, sets the international rules for taxing multinational companies, and it also sets the international rules for sharing information between countries. And that's where we've seen the huge failure of globalization. We've seen a failure to set rules which allow us to tax the Googles of this world and the Amazons. And I think David's going to be talking a bit about that. But those rules have completely broken down, and you're all aware of that because of the huge press coverage which we've received in the last few years. But the rules have also completely broken down when it comes to sharing information to stop the wealthy elites from tax evading and tax avoidance using tax havens. And that's because they can hide what they're doing. And they can hide what they're doing because of a failure of what's called information exchange. And again, the OECD is responsible for that. Now, this is where Britain's role comes in, because whilst we've had Prime Minister after Prime Minister for the last 40 years, in fact, going back 50 years, my entire career actually, I've heard British Prime Ministers saying they're going to do something about tax evasion and avoidance. In practice, they continue to block every single global attempt to do anything about it. They block it at the European Union level, they block it at OECD level, they block it at the United Nations level. And one of the most shocking things that Britain has done in the last 3 years, which has largely gone unnoticed, was that when we had the Finance for Development, Strategic Development Goal Conference in 2015 in Addis Ababa, Ethiopia, all of the developing countries came up with one key ask. And that key ask was to make the United Nations responsible for international cooperation on tax matters. They no longer wanted the OECD, the rich nations, countries, to have that responsibility. They wanted to go to the United Nations. Britain led the way with the United States, and that's under Obama, in blocking that request. And that is truly shocking, because Britain has, as Chris rightly outlined, played a key part in the looting of Africa. By the way, I've got loads of papers published on that. If you kind of Google it, you'll find loads of papers have been published on that. And let's give you some feel for how big that looting is. It's the best estimate that we've got is a trillion. For those of you who are not familiar with trillions, is 1 million million. Is that 1 trillion or so a year is being looted out of the poorest countries in the world. And again, ballpark figure, it's estimated that for every pound of aid that comes out of the north, the so-called advanced west, heading into the poorer countries, at least £10 flows northwards. And that might give you some idea of why it has been so difficult for the poorer countries in Africa to overcome this underdevelopment. Their resources have been systematically looted, and that is Britain's official policy. Bear in mind that most of the key tax havens, the small islands through which these looted funds flow, are British. The Channel Islands, the Cayman Islands, the British Virgin Islands, Gibraltar, Bermuda. In fact, all the key places that were at the heart of the Panama Papers and the Paradise Papers. So, and that raises the question, why the hell aren't we better off as a result of this? Why is Britain struggling when we have this fantastic resource called the City of London just to the east of here, which apparently is the most successful offshore financial centre in the world? Why are we not massively better off? And the reason why we're not massively better off is that hosting a massive offshore financial centre is actually not good for our economy at all. And there are several reasons for that. I'll go through them very quickly, and I can also guide you towards more literature if you want to go into it. The first thing is a subtle effect. Because the City of London is the world's capital of capital, it attracts massive inflows of dirty and clean money constantly, day in, day out. That massive inflow of money has served to increase and sustain an overvalued sterling, and sterling has been overvalued for at least 50 years. In economist terms, that's called the Dutch disease. It affected the Netherlands when they first started pumping oil and gas. The guilder went through the roof, and their manufacturing sector more or less collapsed overnight. And that's what we've seen in Britain. An overvalued sterling has made it much cheaper to import and much more difficult to export goods. The end result has been a colossal underinvestment in everything that we need to diversify our economy. If you look at the investment patterns spread across the economy, you see an underinvestment in manufacturing, underinvestment in most of the productive sectors. Most of the inflows don't go into this apart from through mergers and acquisitions or into real estate football clubs. So actually, far from being useful to our productive economy, we've created what's called an extractive economy. The City of London extracts wealth. And we saw this in particular after the financial crisis, when it was we, the taxpayers, right the way across the country, that had to bail out the City of London. The second thing that the City of London does, which is negative to our economy, is a brain drain. All our brightest and best graduates head into hedge funds. We are literally seeing rocket scientists go into working in hedge funds. And that undermines the entrepreneurialism of this country as well. It is much more, if you want to make bucks fast, you don't go into the productive sector, you go into the speculative, extractive sector. And this, I think, has also, in all sorts of subtle ways, undermined the economy. But it gets worse, because alongside that Dutch disease, the crowding out of the other sectors and the brain drain, we're now in a position where successive governments, and again I'm going to blame Tony Blair for this, because you know that he and Gordon Brown came to an accommodation with the City of London. It actually precedes them. They came to an accommodation with the City of London. They wouldn't regulate the City of London, they wouldn't tax it, they would actually deregulate it. And they would reduce the level of supervision to such an extent that the City of London became probably the least regulated financial centre in the world, on the grounds that the City of London would A, pay a lot of tax, and B, lend them the money they wanted through the PFI, the Private Finance Initiative, to go ahead with the kind of capital investment they wanted. Now, we can be very critical of the PFI, but the point I want to make is that we have seen in Britain our politics taken over by financial interests. And it happens in all sorts of subtle ways. We see government ministers going through revolving doors, they leave office and they suddenly are Prime Minister, former Prime Minister, a Labour Prime Minister is on the board of JP Morgan, the bank. And several ministers go on to join Ernst & Young, KPMG on their board, etc., etc., etc. So those revolving doors work that way. At the same time, on virtually every occasion I've met the Labour tax and economics team through the Blair years and the Gordon Brown period, the people I've met on the other side in the Treasury were actually from PricewaterhouseCoopers. They weren't civil servants. And that's another sign of state capture. I think it's particularly marked in Britain, this state capture, this political capture, which also goes through to the newspapers. By and large, right the way through till about 2008, coverage of the City of London was almost uncritical. I'm one of the few people who was publicly critical of it, and I was clobbered as a result of it. But journalists, by and large, took the view that the City of London was a good thing, and as a result, no one actually looked at what was going on. No one saw the financial crisis as it built up. No one at the moment, well, actually not no one, but we're not that far away from that now, because we've got another crisis building up. We've got asset balloons, asset bubbles across virtually every class of the economy, and yet everyone seems to be comfortable about it. So this finance curse has been holding Britain for at least 3 decades now. It certainly gripped Jersey when I was economic advisor to the government of Jersey. My top-line task on my job description was to maintain a balanced and diversified economy. We had exactly the opposite. And I was saying to the government, this is why I left, why I was so critical of the government, all of your policies are designed to placate and help the big banks, the big accounting firms and their clients. You're doing the opposite of helping Jersey maintain a balanced and diversified economy. I think exactly the same applies here. Now that all sounds rather gloom and doomish, but there is a little bit of good news here before I wrap up. And good news for John McDonnell. Because if we are to genuinely move away from being over-dependent on the City of London, to move away from suffering from this finance curse, the remedies are quite straightforward. Strengthen regulation of the banks. Impose a financial transaction tax. Impose a land value tax. Raise personal income tax, raise at the top end, raise corporate income tax, raise at the top end. In the last manifesto, Jeremy Corbyn was saying 26%. Boy, Jeremy, get ambitious, man. 30, 35, come on. Because if you look back to the 1960s, when the corporate income tax rate was over 50%, that wasn't deterring investment at all. At all. In fact, we saw far higher rates of investment in the corporate community at that time than we have seen over the last 30 years. let's move away from this idea that we make the economy more competitive by lowering tax rates. That's complete nonsense. It comes from an American charlatan, I don't want to call him an economist, called Arthur Laffer. And Laffer has been totally disproved. And yet our politicians, both on the left and the right, Ed Balls, as recently as 2015 said, we are committed, that is the Labour Party is committed to making Britain's tax regime the most competitive tax regime in Europe. Don't you have the faintest idea what you're talking about here? Real investment in a productive economy does not depend on tax rates. Real investors in productive things are looking for things like skilled workforces, good infrastructure, a buoyant market, lots of demand for the outputs and so on. They're not looking for low tax rates. If you're stupid enough to give it to them, they're not going to say no. That's Warren Buffett. So the good news for John McDonnell is we can regulate the City of London. We can raise the tax rates. We don't need to be scared about the City of London shrinking. It's going to happen post-Brexit regardless. They are going to be moving on. Sterling will come down, and we can start the process of creating a more diversified economy. And I'm afraid that has to be state-led. It'll need large amounts of tax revenue to achieve that. And so John will have to persuade the British public that increasing the corporate income tax rate, introducing a financial transaction tax, removing most of the reliefs currently offered to the corporate community, etc., etc., is part of a longer-term development strategy which will help to rebuild the economy that's been decimated by the finance curse over the last 40 years. So I'll stop there. I hope I've raised enough issues, and I look forward to questions and answers afterwards.
On a more technical level about some of the things that we've discussed, and I'm going to try and keep it comprehensively, but feel free to look baffled if it's not, and I'll try and dive down the technicalities of it. But what I want to do is explain something that might have been a bit confusing about the Paradise Papers leaks and the Panama Papers leaks that came before them. Because in Panama Papers, it turned out that David Cameron had some offshore assets, and then Paradise Papers turns out that Queen, obviously the next set of offshore leaks is going to be Elvis. So it turns out that all these high status individuals, to say the least, establishment individuals, have got offshore assets, and everyone from the sort of establishment comes out and says, oh, well, it's perfectly legitimate reasons to be offshore, and nothing happens. And the impression that gives is that there's this huge bundle of assets out there offshore, loads of cash offshore, that all these rich people own, and it's currently legal for it to be there, and that we can just move it onshore and pay for loads more stuff. The purpose of what I want to say this evening is to unpack that a bit and show how it's not quite that simple. But the starting point is, when they say, oh, there are perfectly legitimate reasons to be offshore, that is true because offshore isn't what you think it is. You think of offshore possibly, as people who are familiar with the subject might not think of it this way, but ordinarily one thinks of offshore as a place outside of legal regimes. We think we've got the legal regime in the UK that taxes people and does various things that the state does, and then there's this space outside called offshore. That's not right. Offshore is a deliberate construct of onshore legal regimes. And I'll give you an example. Those assets that are in those offshore funds that belong to, David Cameron or David Cameron's dad or the Queen or whatever, those assets are managed in funds which are situated in offshore jurisdictions just as a paper exercise. The actual managers are in London. So the assets live on paper, they live in Cayman or wherever. The managers are in London. Now that should have the consequence that the assets are taxed here. But it doesn't. And the reason it doesn't is because there's a deliberate exemption in the UK tax code called the investment manager exemption. And that says that if you've got an offshore fund and it's managed from London, subject to certain requirements, certain conditions, it doesn't get taxed here the way it should be. So that offshore fund that lives in Cayman or wherever and where the assets don't get taxed, that is a deliberate creation of the UK tax code. Now, as it happens, Queen or David Cameron or whoever it might be who lives in the UK, if they've got their assets in that fund, they might well pay tax on those assets one way or another in due course. But the UK doesn't care about any of the assets in that fund to the extent that they belong to people who aren't in the UK. And that's why that exemption exists. What the UK is doing is it's creating an offshore space that capital can flow to from all around the world. That's good for the UK finance sector, because the UK finance sector gets the business of managing the assets. And it's not a problem for the UK because the UK can then tax those assets to the extent they're held by UK residents. But it creates a space where capital can flow from the rest of the world and not be taxed. So that's what's going on there. And the problem is that there are loads and loads and loads of these specific elements in the tax codes of places like the UK and the Netherlands and the United States. All of these countries create this array of ways in which capital can flow into offshore spaces and not be taxed. So that's what's going on. What I'd like to do is speak for a little while about the context that kind of ballooning bundle of offshore assets arises in. And that context is the hyper-exploitation of labour at the far end of global value chains. So, most people in this room are probably familiar with the idea of global value chains, or global commodity chains, or supply chains. These are the chains of sales between companies that result in us having the stuff that we, as consumers, buy in the UK, right, or that consumers buy around the world. What happens in global value chains is capital that has accumulated in the form of a large firm, a multinational enterprise, is able to sit at, if you like, choke points in the chain. And a classic example of that is the way in which brands make clothing more profitable, right? That's a classic example that most people are familiar with, that you can own a brand and you can sell clothing under that brand. You don't even have to make the clothes. Yeah? What you do is you go to places where labour is cheap and you open up competition for suppliers, and so independent companies will compete to supply the clothes. That's fierce competition. It pushes down their profits in the countries where the cheap labour is, and by the same token, there are large profits in the hands of the lead firm that owns the intellectual property, that owns the brand. So, when we look at large accumulations of corporate wealth, like you get in tax havens, particularly where the tax havens where intellectual property has been parked, The corollary to that is labour exploitation at the other end of global value chains, and of course that labour exploitation is underpinned by gendered and racialised structural violence of various kinds, and that labour exploitation is underpinned by the desperation of truly desperate people, what Marx would refer to as the industrial reserve army. So where does tax come back into the picture? I've spoken a bit about huge bundles of wealth offshore. I've spoken a bit about exploitation, hyper-exploitation of labour. How does tax fit back into that? Well, where that fits back in, if you think of a country like, for example, Bangladesh, where a lot of clothes are made, wages are forced down in that country by the extraction of value from global value chains in the way that I described. Profits are forced down in the companies that employ that labour, and so there's nothing to tax there. And that kind of fiscal shortfall it arises from value extraction that takes place in a different jurisdiction. There's no tax nexus for, say, Bangladesh, for example. There's nothing for Bangladesh to latch onto and say, oh, we're going to tax that, because it's all in tax havens, being controlled from jurisdictions like the UK. And there's a subtler, but perhaps even more devastating effect of this, and that's going to require us to check the time. Yes, I don't have time to talk about it. And that's going to require me to tell you about a thing called the arm's length principle. Are you still with me? Yeah. Great. Okay. So the exploitation of labour along global value chains that I described, that is where you've got companies transacting in an open market. It just so happens that some participants in the market are much better positioned to extract value from that market. I now want to talk about the situation where it's dealings within multinational firms. So you've got subsidiaries of the same parent company in various jurisdictions. And of course, dealings between such companies have a tax impact on the jurisdictions where they operate. Because if one company in a group pays another company in that same group that's in a different jurisdiction, then that's a deductible expense in one company and a taxable receipt in the other. So the amount that intra-group transaction, the amount that's priced at, makes a difference to the tax take in both jurisdictions. The arm's length principle says that the value of that transaction should be what it would be in the open market, which kind of makes sense. At first blush, you think, well, that makes sense. Make an open market value, that's fair. But it isn't. Because we've already discussed how even in open market situations, there are kinds of capital that suppress the profits of other kinds of capital. Value extracting capital will suppress the profits of productive capital. And you can park the value extracting capital in tax havens. So those open market values replicate within firms the same adverse tax effects that I was talking about in relation to transactions that take place in the open market. What does this all mean? Well, the upshot of all of this is that if you think, oh yeah, we can fund loads of great stuff in the UK because we can just tax all that offshore money, well, that offshore, it's a question of to whom do the slices of that offshore pie really belong? Do they really belong to us? Or do they really belong in places where labour is being hyper-exploited, and there is nothing by way, or very little by way of public provision of services that we know we have a shortfall of here, at least we have. And it's a difficult question. There aren't easy answers to this. But it's something to bear in mind when we consider what can be done by the forthcoming Labour government to ameliorate the problem of money accumulating offshore. And I'm going to be scoring them with a sort of bronze, silver, gold. So the forthcoming Labour government will get bronze from me if it reverses all of the tax giveaways to UK corporate. So the corporate tax rate goes up, and a number of sort of notorious reliefs are abolished. That'd be great if they get bronze. To get silver, what they need to do is go through the tax code, a fine-tooth code, and abolish all of these little features of the UK tax code that create offshore spaces for capital to flow in from all around the world and sit there untaxed. Like the investment manager exemption that I was talking about, another notorious one, finance company partial exemption, which is I won't go into the details, but if you ever want an illustration of precisely how neo-colonial the UK tax code is, then have a look at the finance company partial exemption. Actually, I write about it. If you Google, I wrote an article. It's on the New Socialist website called 77 Nation Army. If you look it up, I just write about it in there. I'm not going to talk about it now because there's been enough technicalities.
What was that name, the reference again?
So sorry. So the name of the article is 77 Nation Army, and it's on the New Socialist website. So yes, so to get bronze, raise the corporate tax rate. To get silver, it's unpick all of these neo-colonial features of the UK tax code, which create offshore spaces for capital to flow in from the rest of the world and sit there untaxed. And then to get gold, it's about going out into the world and making a positive case for a complete overhaul of the global corporate tax system that will have the consequence not that offshore bundle of cash comes to the rich countries that make the rules, but that will have the consequence that it goes to where all of the work is being done in situations, in conditions where people are at very high levels of risk.
And, really continuing the theme here of the human consequences of this kind of ransacking, I'm now going to turn to Angela Moyo. She is going to say something, I think, about Zimbabwe and about the her first-hand knowledge of the effects of tax theft in developing countries.
Thank you so much for having me this evening. My name is Angela Moyo, and I come from the southern part of Africa, Zimbabwe. Thank you for inviting me to speak about tax evasion and the impact that it has in Africa. I am a member of All African Women Group, a self-help group of women asylum seekers. Many of us fled from our countries because of the dictatorship and also the economic devastation in our countries. I am so happy that the first speaker and also the second speaker has already spoken much about tax evasion. And that also is affecting Africa so much. And actually, most of the African countries have been affected by the tax evasion. And I'm just going to illustrate how the British companies have benefited from the minerals that it has actually taken from Africa. British companies control over about 1 trillion of African most precious minerals like diamonds, iron, and copper. Most of these companies don't pay tax on their profit. They get away with this in various ways, like registering the company in tax havens, like somebody has said, bribing the government, deliberately underestimate the values of the resources they extract. So there are so many companies, approximately about 100 companies listed on the stock exchange have mineral operations in Africa. At least 25% of these registered in tax haven, like the British Virgin Islands and Jersey. And there are so many, but we don't focus much on now what they have done. There's also another way that they've exploited the African economy basing on the human beings. We talk about the tax evasion and the money that they've taken, but also through scramble for Africa and through slavery trade. The most important thing that they have actually taken away from Africa is the people, the human resources themselves.
Yeah.
Because if we think about money and whatever, yes, it's important that they are taking those resources like the money, the mineral resources, but the most important thing, like I said, is the people, the human beings that they have actually taken away from Africa, making use of them, and yet they have never invested in their education. Most of us, most of the people that came over, most of them, they are professionals. They are nurses, they are teachers, they are doctors. But what are they doing in other countries, not actually promoting their own countries? It is because of that, the impact that tax evasion has actually caused, the impact of extracting mineral elements from those countries that is making the African countries so poor and affecting their own lives. So really, we should really think about it, how we can actually return those resources back into their countries, and they can be used to develop their own countries. So it's another way that labor should actually think about, of ways of how to make sure that all those human resources are returned to their countries. Right? I also want to speak about my own experience as I was still in Zimbabwe. I was actually teaching, and I have witnessed how people have suffered through poverty in Zimbabwe. I was just teaching in a very poor, remote area whereby people could come to school without eating, without no food at all. They would spend the whole day at school, having nothing to eat, and not even packed lunch. And some could, because it was what we call a day school, whereby people could travel from their homes to go to school. It wasn't a boarding school. So when they come, I could witness children tired, children exhausted, people could not concentrate. And we ended up, most of us as teachers, we ended up providing food to some of the pupils who were so hungry. And we're getting very little money for about $200 a month, which wasn't even enough to feed myself. But because of what was happening, we could make sure that we sacrifice to help those ones so that they can get their education. And why was this happening? It was because of that poverty, which is intrigued by tax evasion, which is intrigued by the British companies, which are extracting minerals from Africa and also making use of their own uses. So really and also nowadays, like in Zimbabwe was the breadwinner of Africa. But now it has gone down, and all the blame is actually put on the government and the local government. But I don't believe that blame has to be put on that local government at all. I believe that, how did it start? It started from the colonial regime, whereby most of the resources were taken. And still up to today, the resources in Africa are being taken. And the native people are still being poorer and poorer, and the rich getting richer and richer. So, this is the experience that we are getting. And the situation at the moment in Zimbabwe is that there's no cash flow, no money in the bank. People get their salaries, but they can't go and withdraw money from the bank simply because the banks have no money at all. And Zimbabwe currently is not using its own currency, it's using US dollars, money from other countries. So really, method of payment that is used in Zimbabwe right now is called ecocash, whereby you buy whatever you are buying using your phone, no cash transfer. So really, this is what we really think, that if we really want to make a development, charity begins at home. After the British government or the Labour Party have thought of helping the international one, they should find ways of dealing with the economy of the African countries, and also finding ways of actually negotiating with the African leaders so that they would understand how to save money and everything, so that it will help the African people, so that they can stay in their own countries, developing their own countries. And we normally have a slogan which says, "We are here because they were there." This simply means that everything that is following the British or the Western countries, it is because it started from where they were there, and we are also coming here in order to get the help that we need. So really, I think we should actually think seriously and help the African countries to stabilize the African countries. And also the money that they are giving as aid to African countries, they give very little revenue to say that they are going to give aid to Africa. But most of the money that they give, they take the greatest percentage. And I've got some figures here which shows that from the revenue that they bring, right. They say it's about 134 billion which is taken to Africa. About 192 is taken back to the Western countries, which means they are making profit from what they have given back, and also from the minerals and everything that they are getting. So this is just a little that I'm going to talk about my experience in Zimbabwe, how it affected and how it is still affecting the people, and that is what is causing them to run away from their countries. Thank you for having me.
What first steps do we think the Labour Party is going to make? I mean, does anybody here have any thoughts? I mean, I'm going to open this up to a general Q&A in a moment. Just want to ask this question though. What sorts of things is the Labour Party going to do you think, to actually meet these sorts of problems? Could I ask you first?
I think the Labour Party is very committed to tackling the international side. I mentioned earlier on the failure, and I think it's been a long history of failure of Britain to adapt the international rules or help with the international rules to make it easier to tax multinationals and to tackle tax evasion. John McDonnell has publicly said that he, first of all, supports the whole process of automatic information exchange between tax havens, will require all of Britain's tax havens and impose upon the ones that will not cooperate to be fully transparent in sharing information about the wealth held through these paper corporations offshore. So, by and large, the solutions to the international side lie with a commitment to deepening transparency. David Cameron, as Prime Minister, talked about and committed Britain to having a public registry of who owns the companies in this country. And actually, Britain now has a public registry of ownership of companies registered in this country. But as I said earlier on, by and large, the city does its dirty work offshore in its satellite tax havens, in the British Virgin Islands, Cayman Islands, Channel Islands, and so on. And David Cameron did not require these islands to have public registries. Now, much of the looting of Africa goes on through these offshore shell companies, registered in the BVI and elsewhere in British territories. And it goes on with impunity because, as I and many investigators have found out, you cannot find out who actually owns those companies. And the islands have refused to do this, but Britain quite simply can override them. Britain has the authority in international law to require Bermuda and the British Virgin Islands and the Cayman Islands and all the rest of them to have public registries, number one. Secondly, it can require full cooperation with international rules that are now a framework for information exchange that's now in place, automatic information exchange. What we're seeing at the moment is that many of the tax havens, Switzerland, for example, which will be announced tomorrow as heading our financial secrecy index, it's been there for many years. Switzerland has politically adopted, a so-called zebra policy. It will cooperate with powerful white countries, United States, rest of Europe, in information exchange. It will not cooperate with the black countries, in other words, with sub-Saharan Africa, Latin America, and so on. It's a complete disgrace. And the international framework of rules still allows this to happen, and there seems to be a pattern of British tax havens doing the same. I know that John McDonnell will require them to have full multilateral automatic information exchange. He will require, committed to it in the Labour Party, commitment to tackling tax avoidance, full country-by-country reporting. I won't go into the technicalities there, but this requires all multinational companies to report on the activities of every subsidiary in every jurisdiction. In other words, if they're parking profits in tax havens, and pretending that they're generating no profits whatsoever in sub-Saharan Africa or Bangladesh or wherever, the new accounting rules will make these accounting scams transparent, and it then becomes easier to investigate them. And that brings me to what I think is one of Britain's key weaknesses here, that now at a domestic level, we all know that HM Revenue and Customs, our tax authority, has been massively depleted. They have moved from having 120,000 staff to something of the order of 55,000 at the moment, moving down to about 45 by 2020. They just don't have the staff to do the job. And to make matters worse, the type of people you need at the top level to tax multinational companies are highly experienced, highly trained people. They earn a fair amount of money, but they're worth every penny of it because their experience, their technical knowledge is absolutely crucial if we are to tackle the tax avoidance strategies of big players like, for example, Google, Amazon, and so on. And I think that this degrading of HM Revenue and Customs, which to his shame, Gordon Brown was very instrumental in starting, but Cameron and David Gauke pushed further and faster, has led to a situation where HM Revenue and Customs is simply not fit for purpose at the moment. John McDonnell knows that. He commissioned Prem Seeker and I to do a comprehensive review of HMRC. We came forward with a whole series of recommendations, but recommendation number one is it's got to be properly resourced. But at the same time, I think, and John McDonnell understands this, if we are to tackle the culture of evasion and avoidance in this country, and help developing countries across the world, we have to tackle the accounting and legal professions, the so-called enablers of this. For far too many years, decades in fact, we've been tolerant, and the same applies to the court, and David, you might want to talk about this tolerance. We've tolerated tax avoidance. The lawyers will say it's, and we heard this a lot coming out of Paradise Papers, nothing illegal is happening. The Queen is doing nothing illegal with having her funds managed from the Cayman Islands. Well, it tells you something about the deficiencies of the law to begin with, and David identified some areas where the law needs strengthening. But more importantly, how can the lawyers say that? The whole point about tax avoidance is you don't know until it goes to a court of law whether that scheme is legal or otherwise. It's for the courts to decide on the legality, not for journalists and commentators. And in many, many cases, when the tax avoidance schemes are actually challenged, successful, and taken right the way through investigation to court, the court will strike them down, as many BBC people have found out in the last few years. And that's crucial, because we have a culture of tolerance of tax avoidance in this country, which we need to overcome. We need to have, and again John McDonnell knows this, not a general anti-avoidance rule, but in my opinion, a general anti-avoidance principle. It should be a matter of principle. We do not tolerate any scheme which falls outside what's been expressly permitted by Parliament. Now, David might want to comment further on that, but that principle will be noted by the courts in determining whether or not a particular scheme is acceptable or otherwise. And it will roll back somewhat on the culture of, amongst the lawyers and the accountants, of always feeling it's okay for them to test the system to the limits. And I think part of that, and I view this as deeply corrupt, a kind of institutionalized systemic corruption, because tax is at the heart of democracy. These companies, I'm talking here about PricewaterhouseCoopers and Ernst & Young and Deloitte and Touche and KPMG, are actually engaged in a full-out attack on our democracy. And we should attack back. And I'd love to see a few of them sent to prison, either for failed audits, or for their tax evasion schemes, or whatever. I sincerely hope that John McDonnell will live up to his reputation of being a little bit tough occasionally. I want him to be the last man in the room to blink when dealing with people like that. And I still think that tax will remain a major component of any fiscal policy, including revenue raising. We need to move to a very different tax regime, a regime where we, for example, reverse most of the, let's just talk at the meta level. What we've seen in the last 50 years is the detaxing of capital and a shifting of the tax charge onto labour and consumers, which explains, as Chris did right at the very beginning, why tax has been so instrumental in making this country so much more unequal than it was. So we do need to use the tax regime, first of all, to kind of, within a marketplace, reduce the cost of labour in respect of capital. Capital has become massively untaxed. And the other thing is that land, natural resources, are almost untaxed in this country as well. We should be looking at the land value tax as a substitute for business rates, which is regressive and particularly harmful to small companies. A land value tax would be an excellent tax to introduce into this country sooner the better. So I think it's not a case of either or. I don't think that QE is a substitute for a more progressive tax regime, or vice versa. I think that the Corbyn-led government would be able to do both. And I certainly think that any future QE programme would need to move away from using the banks as the principal instruments for receiving the QE. We need to have a much more sophisticated way of getting that into demand within the domestic local economy. And I think part of that might involve having regional and a national investment bank, because by and large our banking system, the capitalist banking system, is detached from the UK economy. It's far too interested in offshore stuff. And the other question I wanted to address was this issue of the Queen and her role. A few years ago, we published our Financial Secrecy Index in 2013. I wrote a very respectful letter to the Queen and said, Madam, actually, you are the head of state of some of the most toxic tax havens in the world. Would you please speak to your Prime Minister when you have tea with him and ask him to pay more attention to... The answer to your question is the UK government is empowered to intervene. It can intervene tomorrow in the Channel Islands and all the Crown dependencies and all the overseas territories. Anyone who wants to look at the constitutional arrangement can look at the 1973 Brandon report and the 2014 supplement to the UK Constitutional Review, which concluded that the UK is absolutely empowered to intervene and to extend its laws to all of its overseas territories. Do it tomorrow. Don't even bother to consult with them, just do it. We don't need gunboats, you have the power.
I wanted to say one quick point about the collusion. I was glad you raised that as well. And one of the people involved is like Baroness Amos, who was a minister for the Labour government during the time when Labour was, the government was invading Sierra Leone. And she resigned and right after became the director of a platinum company which controls all the rutile in Sierra Leone. And she's just one of many. And I think one of the problems is that often women or people of color or labor people are held up as icons and put on platforms, but they're the very ones colluding with the theft. And I think we really have to call it out on that kind of corruption. It's very hard, but we have to do it because we can't let those people sit there and pocket money. And the last thing I wanted to say is President Nyerere tried to do something different after independence. He encouraged farmers to get together, work collectively. Everybody who worked would eat and have resources. And unfortunately, that was undermined by politicians who were outraged because what Nyerere said, they had an Arusha declaration, and it was against corruption. It was against ministers. He said, you shouldn't be owning loads of property. You shouldn't have 2 cars. You're supposed to be a servant to the people. And some of the politicians were infuriated by that, and they sabotaged the socialist villages. There's a book, which I'll show you afterwards, called Ujaman. And I think we really need it now while we're trying to rebuild the Labour Party and really transform society. I think we can look at people like Nyerere, and there's a lot to learn. Thank you.
Thank you.
At the time, I've also worked with one of the big 4. I worked with someone called toilet and douche, otherwise Deloitte douche, in their offshore operations. But that was just part of an investigation. I mean, I absolutely agree that there are multiple conflicts of interest in a company like KPMG, which, amongst other things, advises governments on policies, takes on massive contracts with PFI suppliers, provides audits to them, and at the same time gives them tax and other consulting advices. They are multiply conflicted, they are constantly failing. What can we do about it? Because I slightly disagree with one point you made, which is when you are operating a gigantic multinational company, there is some benefit to having an audit company which can do a seamless global audit. But I'm not convinced that that is necessary. What is necessary is to break them up entirely. We need to have, I mean, the current problem is, and you can discuss this in Brussels or in Washington, there are not enough big audit companies. There's no competition at all. They're running an oligopoly. I totally agree with that point. We must separate them from, I would like to see absolutely no PwC, KPMG, whatever involvement in Treasury or in HMRC. I was scandalised by the extent to which Ed Balls and Gordon Brown used PwC and KPMG to actually shape tax policy in this country. No Labour government should ever do that again. So let's get rid of all those. But also let's stop more generally, stop procuring government procurement to these companies. If we need to have, and the one way of doing this, of course, is that some of my colleagues think that we do need to have nationalised audit companies, and there is probably a case for that. Because even from a kind of a purely capitalist, free market point of view, it's clear that auditors are failing shareholders left, right and centre and have been doing comprehensively far too long. It's systemic, it's not the occasional bad apple.
Abusive tax behaviour exists on a kind of continuum ranging from fairly low risk tax avoidance to highly abusive, aggressive tax avoidance through to tax evasion. And all along that spectrum, the revenue will take a sort of tactical view as to how fiercely it's going to enforce against it. And the paradigmatic example of that is even if it comes across cases of criminal tax fraud, quite often it will sit the taxpayer down and say, listen, you've committed a criminal offence here, but if you tell us everything and give us the money, we won't prosecute. So, and that's a perfectly reasonable sort of tactic to take in certain circumstances in order to maximise the revenue that they raise. But what that means is that for a whistleblower, they're going to have to take a punt. If they're going to aim for that cut, they're going to have to take a punt on their professional position based on an unknowable, which is the enforcement tack that the revenue is going to take. So if they're looking at a case of kind of medium to aggressive avoidance, they could report it. The revenue might look at it and think, well, tactically we don't want to go after that one because of such and such a tactical internal reason. And then the whistleblower finds themselves in a slightly uncomfortable position, I think. So I suspect that they might weigh up the risks and not go for it.
In most cases, multiple years of criminal tax evasion. The reason I'm most scandalised about that is because young people who stole a bottle of water during some riots were sent to prison. What kind of message are we sending out about criminality and the culture of this country if we don't send these people to prison? And the lawyers as well, because the lawyers who advise are also complicit in this process. That would massively and radically change the culture amongst the advisory community.
CCCTB is going to do is it's going to set the tax base on the EU level, and then the tax revenues will be apportioned between member states. If I was advising, I mean, obviously, which beneficial parts of being a member of the EU, post-Brexit UK can pick and choose from, will depend on the shape of the
the Brexit we get.
Spoke earlier, and others have spoken about the huge amounts of labour, and Angela mentioned rightly, the huge amounts of human capital, human resource, brightest and the best, trained doctors, trained nurses, trained education workers, etc., flowing out of Africa, coming north to work in this country, plus all that capital that's been looted from Africa has led to decades of underinvestment in African countries, decades of not building the infrastructure, not funding the universities' research and development, not training, in other words, not building productivity, not building new industries in Africa. End result is, the capital flows heading northwards to Britain have been enormous, and the rest flowing into Britain, but also North America and the rest of Europe. Africa has been depleted by this failure of the global rules and by what's the so-called Washington consensus, otherwise known as neoliberalism, this view that deregulating the economies, forcing trade liberalisation, capital market liberalisation, privatisation and so on, will actually help Africa to develop. It hasn't. The end result is that capital has flowed north, and now workers, quite reasonably, are saying there's no jobs here, so we want to go north as well, following our capital. And I don't find that unreasonable. But we put up barriers, we criminalise workers wanting to move northwards, we don't criminalise the capital moving northwards. In fact, we welcome it with open arms, but it's left most of their states incapable of protecting and actually developing their countries.